What is going on, Hyperfam? Welcome back to the channel. We're going to have a very simple video for you guys today. We're going to go through the update on the market of what happened yesterday since our last video. If you haven't watched that video, I'm going to leave a link in the description. We talked a little bit about silver and the potential outcome this week of silver going up, and we saw that some stocks opened up much higher than their closing on Friday that were involved in the silver market. So we're going to go over a little bit of what happened there. We're going to go over the S&P 500, so SPY and where it sits, and then we're going to go over chart requests that we got from my Harper community. So without further ado, let's go ahead and get started. First, we're going to talk about SPY or the S&P 500. So let's talk about what happened today a little bit. So we can see that we had recovered up quite a bit. So we shot up, I believe, up to 300 points since open. So we opened a little bit higher than our close on Friday, yet we closed still below the critical 382 level. So we're still below 382, and on the daily chart, we are still below the 10 and the 20-day moving averages. We can see that the bounce volume off the 50-day moving average wasn't enough to take it above the 10 and the 20-day moving averages, and the volume was much weaker than the selling volume that had occurred last week on I believe this was the 27th and this was the 29th, which was Friday. So we're still looking like we're headed downwards. Today was a little bit of a recovery, but it could have been just a relief bounce. So I wouldn't get too comfortable yet. I would wait for the S&P 500 to give us another strong upward momentum day before we can trust it fully. One thing to remember, you guys, is that when you're talking about a market recovery, especially after two strong selling days, people are going to be hesitant in opening up those positions again. Therefore, you're going to see a slower recovery. You're going to see us crawling back up. And if we're not crawling back up with what appears to be strong momentum and we have a strong catalyst driving us up, then we can easily turn back down and retest that 50-day moving average for a potential break below or a bounce back above. So we're certainly not in the healthiest shape just yet. So key levels to look for tomorrow are the break above the 10 and the 20-day moving averages, which is right around 380. If we're able to go back above 380, then I expect us to consolidate for some time before between 382 and 386 to eventually break out towards our $400 mark. The next thing we're going to talk about is a little bit of the silver market. So you can see that the silver market in post-market on Friday and pre-market today, Monday, we can see that there was a significant push higher. Yesterday, we talked about it potentially going towards 30. However, it didn't reach 30. It actually fell below our expectations, and it dropped below, just below 30. So didn't quite make it to 30, and then all day today it dropped lower and lower. So here's something to understand about Wall Street and what's going on between Redditors and Wall Street. So right now Redditors have flocked over to silver, or supposedly that they have, and they've moved their game plan into attacking the silver market and driving that up. Wall Street already saw this coming, and knowing what happened with GameStop, they had likely prepared to trap these guys in order to maintain longer positions or profit off of them on the other side. So as of right now, silver market did not react as we expected it to. In fact, it got rejected very strongly right off the bat at $28 and kept moving downwards. However, it's still not in terrible shape. It's still above that $26 support, so we still have 26 for it to bounce off of. If it does come around this week and breaks above $28, which is the resistance in which it got rejected off of 1 and 2 times, then it can potentially break 28 and move towards that $30 price target that we have set for it first. So the first stock that we had a request for from our group was Space, or SPCE, Virgin Galactic. This is a very, very hot name in the game. So obviously, we can see that the stock has been in a strong uptrend for the last week or so. After consolidating for some time, after making its big move towards 60, the stock pulled back, consolidated, maintained a level above the 10-day moving average in consolidation, and notice that the volume on the pullback was much weaker than the volume on the uprise or the uptrend. So that is a very key concept to understand. Price action and volume are your best friends in trading. If you're looking for a swing trade, you need to focus strictly on the daily and the hourly candles. We know that the daily candles have a stronger uptrend volume than there has been a pullback volume, therefore indicating that people who bought the stock up are still interested in their positions. So now that we know the daily candle is strong, let's go ahead and focus on the micro picture, or what's happening in the micro picture. So space ran up into post market. So after market closed, SpaceX, which is not related to space, however, it is in the same industry or sector, SpaceX launched that they will be launching civilians to space, meaning it drove the entire space exploration market up. Let's see what Maxer did, just for the sake of argument. Actually, this one did not go up. So this is one to watch tomorrow. Look out for MAXR tomorrow. But space reacted perfectly to that news or that catalyst. So we can see that it drove up to $60 in post-market. Therefore, we can expect the stock to actually make a move in the pre-market tomorrow. Our primary resistance to break out of for space is going to be at $60. So although it got rejected just below, just for safety reasons, we're going to say that the resistance is $60. We can expect space to consolidate between the $50 to $50 and the $60 range. I know that's quite a large range, but that's what happens when stocks move vertically, which is why we don't really like stocks to move vertically. We like them to move in a more fluid fashion. That way we have stronger supports created through the move up, but when they move up vertically, we have lower support points. Therefore, we have larger ranges. So now we have a range between 52, 50, and 60 that the stock can technically consolidate in between tomorrow and still be considered in its healthiest shape. If it does break above $60, then the stock is going to all-time highs. Therefore, we really cannot gauge how far up it goes just by the chart, because we don't have any historical analysis at this point. So we have to gauge it by momentum, and we have to gauge it by the relative strength through the day and intraday. But we can see this at least going past 60 tomorrow, assuming that it's going to keep the same momentum it had in post market. The next talk we're going to talk about is Amazon. So Amazon has their earnings tomorrow. Let's see if they are after or pre-market. So they are actually aftermarket tomorrow. So Amazon had a monumental day today. You can see that Friday was a little bit tough for them after they came down, but they managed to bounce right above their 10-day moving average today, and they shot up more than $130 through the day. So this phenomena right here, what happened with Amazon, is not uncommon for such an expensive stock, because you got to remember, for a stock to move up $100 for a $3,300 stock, that's still a relatively normal move. So it may seem like a large move, but it's not as large as one would think of it if they don't think of the ratio here. The stock couldn't manage to break above 33.50, and they have earnings tomorrow post market, as we mentioned. So it's going to be an interesting day for them tomorrow. Will they continue their move up? That's really unknown. Stocks tend to act a little bit choppy or unexpectedly during their upcoming earnings. So I think tomorrow we'll see a flat day from Amazon, considering they moved up so much today in anticipation of their earnings. If they do break above that 32.50 early in the day, you have to keep an eye on the S&P 500, because Amazon is very much present within the entire market. It's a very large company. Therefore, the overall market momentum will also be impactful, and Amazon's momentum will impact the market back. So as far as this chart goes, we are looking bullish on Amazon. However, that earnings post-market tomorrow is going to be a very large determinant of where it's going to head to next. Next stock on our watch list is going to be Sundial. So this is actually one of the choppier charts we've seen lately. You can see that the stock has not made up its mind in terms of direction. Yes, it's moved up today, but it has been one of the most frustrating holds for a lot of investors out there, primarily because it was also impacted by the Wall Street bets, AMC, GameStop, and Nokia frenzy. The stock wasn't directly one of the bigger names, but Wall Street bets did have an impact on what could have been a very smooth move for Sundial, because they were setting up for a very nice setup. They did move up today, and they recovered back from their Friday lows. You can see that they're way above the 10-day moving average and the 20-day moving average. However, they are still below their lows, their highs from last week. So we have a resistance point at 1.36, and we're going to check in just a second if they made a post-market move here. So let's see if Sundial moved in the post-market. They did not move in the post-market much, so tomorrow the main focus remains at 1.36. The stock has a strong support at 0.89, but when a penny stock breaks above $1, that $1 mark automatically becomes a strong support because it makes it a whole digit. Therefore, we can use $1 as a support. We need the stock to break above 1.35 this week for its potential to go towards 1.60 and maybe higher depending on how momentum drives it. Next stock on our watch list is going to be IDEX or IDEX. Let's see what's going on with these guys. As actually, these are drawn out perfectly. We can see that we already have some numbers laid out on IDEX. We have a support here at $4. And we have a resistance at 4.75 in which the stock got rejected off of today. The reason why this is a resistance is because the stock had been rejected strongly off of it before. So we can automatically put a resistance at 4.75, which you can see that the stock got driven up to today, but it failed to hold that breakout. So what's going on with its micro charts? Let's see how the stock is acting in the micro charts. The stock appears to have steady volume, but it's not leaning towards one direction specifically. It's not expected to make its big move tomorrow unless we see a big move from the electric vehicle market overall. Today's move didn't look as fluid as it should be for it to continuously take on this breakout. So I do expect it to take some time to consolidate a little bit more below that 4.75 before attempting a breakout above it and moving towards a 5+ price target. Next stock on our watch list is going to be ACB. ACB and the cannabis market in general have been quiet. Although there has been positive news from the feds that they will be legalizing or bringing on marijuana or lowering their laws on it. All this positive news and catalyst means nothing if the charts are not ready. Therefore, it's very risky to trade news. We always talk about it in our group. We should not be trading news. We should be strictly trading charts with keeping the news in the background or in hindsight. So what has happened with ACB over the last few days? The stock was channeling down and eventually broke out of that channel. You can see that the stock is using the 10 and the 20-day moving averages as support. Today, it bounced off the 20-day moving average from its lows and managed to close above the 10-day moving average. Volume overall does not seem one-sided. It doesn't seem like it wants to push. However, when we're looking at the overall chart, we can see that the stock is attempting a move to go into an uptrend or a stronger uptrend. The strongest resistance points that we have for the stock are going to be at $13, and we have a strong support at $10. So this is our trading range, and we need the stock to break above 13 to eventually test $14.56 for it to break higher. Earnings had just passed for the stock, so we don't have to worry about these earnings. TradingView always has a bunch of earnings that are not actually right, so I don't like to go off of their earnings. So the stock overall looks good. We need it to stay above $10, preferably above the 10 and the 20-day moving averages to eventually make its way towards 13 for a breakout. $13 is still quite a bit away, so unless there is a massive catalyst for the cannabis market over the next few days, this will likely take a few days to consolidate before attempting that $13 breakout. The next stock on our watch list is going to be DraftKings, in which I heard had moved up in post-market. So let's see how these guys are doing. They are doing perfectly fine. So we talked about DraftKings in our video yesterday. For those who didn't miss it, like I said, I have the link in the description, and if you have not already subscribed, make sure you do so. DraftKings is up in the after hours to $58, and so they are almost at our $60 price target. However, if they are up in post-market that much, then perhaps they have more juice to go. So let's see where we can get out of DraftKings tomorrow. So 58 remains a strong resistance for them. We can see that they've been rejected off of 58 before, but they closed at 58 in post-market. So tomorrow, the stock will either gap up above 58 and pull back to it. If it does pull back to 58, we need it to hold it as support for it to remain in its healthiest territory. If it opens below 58, then we need it to break out of 58 to move towards 60 and even $62 to $64 with enough momentum and a healthy market. So overall, still bullish on DraftKings. It's looking good. Next stock on our watch list is going to be GrowGeneration, which I believe we talked about yesterday in the video as well. The stock is still trading below the 10 and the 20-day moving averages. Therefore, that should be our main focus going into tomorrow. We can see that volume is still not as strong from the bulls. Therefore, the stock could easily get rejected back down and retest $42 as support. After $42, if the stock could not hold that support, then the stock's next support is going to be down at $37.40. $2.40. So we have to be very careful with this one over the next few days. If the stock cannot make it over that $48 mark and the 10 and the 20-day moving averages, it's still in a critical shape to come back down further. Keep in mind that this stock is also involved in the cannabis market, so any cannabis news that is influential is going to impact its pricing. Next stock on our watch list is good old Tesla. What is Tesla up to after their earnings? So Tesla had actually fallen after they reported very good earnings, and they are currently trading just above their 20-day moving average but below the 10-day moving averages. So I think you've seen a trend now. That's the main focus over the next few days. If the stock could make it above that 10-day moving average again, we need it to break above 860 eventually. So let's look at the micro picture and let's take out the extended hours. You can see that the stock had formed a let's see how their recovery went today. So not a bad recovery, but also did not put it back where it needs to be. The stock is still below their gap down. So you can see that they had a gap down here. So they have a gap to fill up to $860. Anywhere below 860 is going to be too risky for the stock, and it could easily turn its way back down and retest its lows. So just because it bounced back up today, it doesn't mean it has enough strength to continue moving up. And remember what we said about markets being hesitant to take stocks back up to their normal levels. So right now, the biggest resistance for you to focus on is going to be 850 and then 860. Above 860, the stock is back in healthiest territory, and we can expect it to consolidate above 860 for quite some time before it even bothers to break 900. A stock as expensive as Tesla is going to be a strong mover, but it takes a lot of coil time or consolidation time before it can successfully break out of the strong resistances like the $900 all-time high. The next stock on our watch list is going to be Apple, and like Tesla, Apple fell right after their amazing earnings, and you can see that they actually came back up today and they attempted a recovery. However, they could not even make it back above the 136 resistance. So we have two resistance points that are critical for Apple, and we'll go over to their daily candles in just a second. But based on the micro picture, we need Apple to be back above 136, back above 138, for them to be back in healthy territory. Anywhere below those 2 points, it's at risk of turning back towards 132 and breaking back to 130. $130 is the most critical support that Apple has this week, given the fact that that was their low of last week. So if they break 130, it's bad news for Apple because they can pull back down towards the 126 support, which is an absolutely critical support for Apple and the overall market, given Apple's strength and market cap in the overall market. So very risky stock here. We have to figure out if Apple can push back over 136 and 138 today or this week. That way they don't turn back towards the 130 and make matters worse for the entire market. The next stock on our watch list is going to be DBX. So DBX has actually a pretty interesting pattern overall. Let's see what their daily chart is looking like. So when we break down this daily chart, we can see that they consolidated for the longest time ever. So the stock took 5 months of consolidation before they finally saw some upside. They got rejected at a high of $25 after their run from 17. So we can put a resistance at $25. After getting rejected at 25, they pulled back down to $22, so we can put a support at $22. And now the stock looks like to be consolidating. It has strong bullish volume, so it's leaning bullish, but it's not getting the momentum it needs to break back above. There is another resistance point in which it needs to be broken, which is 23.50. After the stock breaks 23.50, then it will put itself in somewhat of a healthy range in between 23.50 and $25, in which we can expect it to consolidate for some time before attempting a move above 25 and then another one above 26 for a $30 price target. But overall, stock looks bullish. Entry is possible with a stop loss just below the $22 support. Next stock on our watch list is going to be Uber. So let's see what Uber's up to. And let's see if this earnings is actually accurate. So I'm not sure if Uber already had their earnings. Let's see. So they have their earnings on the 10th. So there's still some time till their earnings. So let's see what their daily candles are looking like. Okay, this is a pretty ugly chart because you can definitely see that there's a lot more selling on Uber than there is buying, considering the volume as well. So there's not a lot of recovery volume, there's not a lot of buying volume for these guys, and they are still trading below their 10 and the 20-day moving averages, and this could easily turn back down after getting rejected. You can see that volume actually decreased day over day on their recovery, quote unquote. So Uber is still in critical shape, especially below 52, and they're also in critical shape below 54. So I would personally wait for Uber to make its way back above 54 before calling it a safe setup, in which then we would want it to break out of 56 to move towards the $60 price target and then test for all-time highs once again. As of right now, I'm not seeing a good setup on the stock, so I would allow it to develop for a few days. Next stock on our watch list is going to be API. So API had a massive gap up today. So they closed around $56 on Friday and they gapped up to a high of $81 today. So what is going on with this stock? Let's see what's news related for them. So it doesn't look like there's anything specific to them except for maybe them raising private placement. So they actually have raised $250 million in financing. So that could be it that drove the stock up. What are we looking at for tomorrow for these guys? So it's very not like our strategy for us to trade stocks based on news catalysts or news moves. So let's see what's going on with the current chart and if we can see a potential setup. You have a support point at 68 and you have a resistance point at $80. So that's quite a large range. Tomorrow, considering the stock gapped up to this point, however, it had this strong selling hour, right, to start off the day. So right off the bat, the stock started selling off and it created this massive selling candle and it didn't have much buyers afterwards. So as of right now, the stock could kind of go anywhere. There's not a lot of the stock charts is not giving up much or giving us much to work with. So I would allow this one to develop for a few days before going into it or making a move on it. Last and final stock we have is going to be Microsoft. So Microsoft has actually had a pretty wild few days. You can see that it moved up to 245, back down to 230, back up towards 245, back down towards 30, and back up towards 245. When it comes to stocks that move like this, we know that they're in pure consolidation form and they could break either way. Our job is to see where volume is leaning towards, and as of right now, looks like volume is a little bit more bearish than it has been bullish, but it's distributed quite evenly. We can only use the following method to trade the stock. Considering the stock has bounced off of 232 multiple times and that was its initial breakout point, we call that the initial breakout point because if we look back in its history, we can see that it got rejected at 232 before and it broke above 232. Therefore, that point automatically becomes a support point. So we can use 232 as our primary support for entry, and we can wait for the stock to eventually gain enough momentum and break above the high of $242.70. If it does indeed break above that point, the stock will move towards our $250 price target. Anyways, you guys, I hope you guys enjoyed this video. If you did, please hit the thumbs up. If you'd like to see more, please hit the subscribe button. Thank you so much for checking in.